Hello and welcome to the Trader Trainer. My name is David, and in this brief presentation, we're going to go over a few bear market tips. So stick around. We're going to kick the presentation off with a quote. You make most of your money in a bear market. You just don't realize it at the time. Shelby Cullum Davis. So the first of our bear market tips, well, it's not really a tip at all. It's more like an image, and it's the image of a bull heading into a big chair smackdown. But it doesn't have to be so adversarial. I always tell my students, the market doesn't really make it easy for you in either direction. The man behind the markets, the composite man, the machine, whatever you want to call it, it's really working against retail at every turn. So bull traps, bear traps, you name it. There's always a trap to fall into, whether you're going up or down. So this presentation has helped us overcome some of those challenges and not think of it so adversarially and actually take advantage of the bear market for the long term. So let's keep going here. The first of the tips is we always hear buy the dip, but which one is it? We hear don't catch a falling knife, but we're supposed to buy the dip. So how are we supposed to know? We know trying to call a bottom is very hard, and it's even harder to do it consistently. There's so many things we have to be concerned about, like temporary upswings. You know, there are bull runs within a bear market. There are bear runs within a bull market. So how do we know if it's just a pause, or it's just a pullback, or it's a reversal and the market's changing directions? We have to be very careful that we're quite certain we get plenty of confirmation and we understand the cycle we're in. That's something we're going to go over in a few minutes as well. Next thing, shorting too aggressively. Are you over leveraged? I tell my students there's nothing more attractive than when you see that lever going from 5% to 100%. There's a part of all of us that just wants to just like, oh yeah, this idea can't fail. Let's get it to as close to 100% leverage as possible. There's a piece in all of us that wants to do that. We can't listen to that voice though. It's got to be in our trade plan. We can't get over leveraged. If we do, we are going to get wrecked. So I advise you don't get wrecked. Next one, big one. Revenge trading for long-term losses. How many people are looking at their long-term account right now and going, wow, I am 50, 60, 80% down from where I was. I better make up for it in this trade. Let's play with the leverage. So it's a subtle form of revenge trading that so many people are doing, and they don't even realize it because they think, you know, like, oh, your long-term portfolio is something separate than your day trading account. But little do you know that subtle, you know, seeing that account down, 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 you're trying to make up for it. You don't even realize you're revenge trading. So that's the worst type of revenge trading, when you don't even realize you're doing it. And I see it happen all the time. Don't let that happen to you. Okay, so the next one, we briefly talked about this. Know your cycles. Know where you are in the overall cycle. You think we're here, and we're here, and you know it's just important to know where you are, because you need to start loading the boat in here and taking profit here and buying more in here and selling here, here, and here. But if you think you think we're here, but we're really here, it's going to really screw up your buying. So very important to know where you are. And believe it or not, the Bitcoin chart fits perfectly almost over this. I've seen them both overlaid together, and these cycles are known. It's the same psychology we see over and over again, cycle after cycle. So get familiar with it and don't be fooled. Don't think you're optimism when you're denial. Next, getting emotional. This ties in hand with over trading and revenge trading, like we talked about. So we have to stay disciplined. We have to stay patient in a bear market. You know, we can't seek for instant gratification. We have to play the long game. So we can't get emotional in this bear market. It's really easy to get caught up in the FUD, the FOMO, whatever it is. But we have to stay neutral. If we can't stay neutral, I advise my students, don't get in the markets. If you can't play the game, don't jump onto the field. wait until you're ready to jump on the field, and then engage when you're in a neutral, probability-minded mindset. And that's what we're all looking for. So being too heavy into alts, also a big problem. In a risk-off environment like we're in right now, where people are getting away from the riskiest things. So crypto is being considered, whether we like it or not, the most risky asset class pretty much out there, right? So a lot of money coming out of this. So best bet, stick to the beat down blue chips. Those blue chips are getting beat up as well. But it's oftentimes a ratio of like 3 to 1. So the altcoins are going to get beat up 3 times more than the blue chips like Bitcoin, Ethereum. So keep that in mind. Don't be too heavy into alts during a bear run. And then last but not least is don't quit. That's right. It's for lack of knowledge that people will perish. So focus on education, focus on patience, focus on building yourself up during a bear market so you're ready for the next bull run. There's still so much opportunity in crypto and in investing and trading. So make sure you're ready to get on the field when the time comes to start loading the boat for the next bull run. So don't be one of those crypto tourists who's here when the times are good and when the times are bad, you're nowhere to be found. Start building now so you can cash in when the bull run hits its peak. So this has been a quick how to survive a bull run with just a bear run with a few tips. This is the Trader Trainer. My name is David. So great to have you here. I will see you on the next video.